Hello everyone and welcome to Finance with JCL. Welcome to the show, and today I'm going to be discussing with you the 12 conditions for investing success. So if you're a brand new investor, or perhaps you've dipped your toe in but you're not vastly experienced, this is going to give you my view on the 12 key areas that you need to have locked down in order to be a successful investor. So let's go. Now I'm going to split these 12 steps. So first of all, into 3 preparation steps: the objectives, understanding your position, and then what I'd call the prerequisite steps. So let's have a look at those, and we'll start with number 1, which is the objectives. So you need to have together what are your life goals, and linked to that, what are your financial goals, and you need to set some financial goals, and then following that, set your investing goals. Now, this is quite a difficult thing to do, particularly if it's the first time you've done it. And I'd urge you, throughout this presentation, to consider taking professional financial advice to help you with some of these aspects. So these are the steps that I'm doing for myself, which I think give a good framework, the conditions for success for you. But no, this isn't financial advice. I'm not a financial advisor, so do make sure you take the appropriate advice. So after the objectives, we get to understanding your position. The idea is you do a full financial review, get together what your current income and expenditures are, get your budget together of what you've been working to before, look at all your assets and liabilities, including your debts, and that all could include some of your existing investments, and importantly, your pension schemes as well. It can be quite difficult to get that information sometimes. Once you've done that, you can then get to the prerequisite step stage. So these are the actions that you need to take before you should even consider investing, in my opinion. So the first of those is any mid or high interest debt needs to be paid off, because the amount of interest on that will probably be higher than the rate of return you get from investing. A very clear budget linked to those goals and objectives from step 1, and then actually calculate, based on all those factors, what rate of return do you actually require from the investments that you're going to make. And that will set you up for success. Now, I'm planning to bring together an investing toolkit, which will have a lot of tools to help you with these steps, so you can do some self-calculations. Now, it's always good to take professional advice, and that should be what you do. I can give you some free tools just so you can play around with if you want to have a look at things yourself. So I'm in the process of building that. It'll be a few months before that's ready, but set your reminders, that is coming. So then a reminder of those 3 preparation steps: objectives, understanding your position, and then those prerequisite steps. Now, once those done, we can now look at the actual key conditions for success. So here are the 9 conditions following on for those earlier steps. So the first 6, I would say, you absolutely need before you can start. And then the final 3 will improve your hit rate and probably improve your position. So we've got investing styles and options, brokers, screening, stock qualification, valuation, and buy decisions. You can't really start without any of those 6 things. And then if you really want to kind of improve further after you've started, you need to look at selling, tracking, and then useful information. So under investing style and options, first of all, you need to consider whether you're in active or passive mode, or even hybrid mode. So what I mean by active is understanding, am I actually going to be stock picking myself? Or passive mode, perhaps you're looking at index funds where you can always just buy them, chip in money each month and ignore them. Of course, hybrid mode is somewhere in between the two. You need to understand your current level of knowledge and also what rates of return you require. Perhaps the answer to those 2 questions might inform whether you're in active or passive mode. And the other thing is looking at your options of not just investing, but kind of putting money into pensions through that mechanism, and also what are the tax efficient options. In the UK, there's ISA there's Roth IRAs in America, and I'd assume there are other options in different countries. You need to gather all this information, and if you've got all those points ticked off, I think you've got this condition for success nailed. Now, the second one is brokers. You can't really act without a broker, and you need to consider, in my view, what access does the broker have to different instruments and products, so pensions, ISAs, options, shares, funds, etc. What fees they're going to charge, not just for the transactions, but for the account and portfolio management. They have a wide range of access. So some brokers, such as Hargreaves Lansdown, who I use as one of my brokers, they've got a very wide range of funds on there. But actually, I use Interactive Brokers, and there's a link down below if you want to join with them. For some stocks, they've got a massive range of stocks, and their transaction fees are a bit lower. Now, given the Robin Hood and the stuff in America and GameStop's kicking off, you want to look at reliability and reputation as well, and the financial position of the broker, because you don't want the hassle of your broker failing. Now, I don't know whether your money's protected. I think it's different in different countries, but I would definitely want to go to a broker where they've got a good financial position, so you don't have to worry about that. So once you've got your condition for success with the brokers, the third of the 9 after the pre-steps is actually the screening step. This is a very important one because it's finding the right stocks or funds or index trackers to actually invest into. You need to work out how you're going to do that, and you need to understand what your own knowledge and experience is for finding stocks. Get the right financial websites, have screening capabilities. Look at the Peter Lynch thoughts on it. And also there's, of course, the copycat investing or suggestions. Now, I would never suggest blindly copying someone, even if it is Warren Buffett. But certainly by seeing what his actions are, that could give you some ideas for you to investigate yourself. And the fourth of the 9 core steps for the conditions for success is actually then the qualification. So you've done the screening and identified a stock, perhaps. How do you actually qualify it to see if it is suitable for you? And if you can understand balance sheets, profit and loss, cash flows, if you can understand how to assess what a company's got a moat, certainly you should know what your circle of competence is. Can you assess the management? You can have a look at the Peter Lynch classifications, rather. And I'll have put something together on those for you already. And then what's the potential return and how does that kind of link to the objectives? And of course, once you've done that qualification, you then need to assign valuation to the instrument that you're buying. So you need to have in your toolkit, in order to potentially be successful, different methods to value companies, because a discounted cash flow may be appropriate in some cases. The price to book or the book value may be appropriate for banks, for example. But also price to sales for growing companies may be a better method. And there are many other methods as well. You need to understand the price to earnings ratio, both trailing and forward, and also have the right calculators available, whether that's a spreadsheet or a website, so you can actually calculate the discounted cash flow, for example. It's a very important condition for success. You need to value it to determine whether it can meet your rate of return, for example. And then once you've screened, qualified, and valued, you've got that very important thing, which is the buy decision. If you're able to construct a story for your investment, the very important thing, a margin of safety, minimize hopefully the amount of money that you might lose or mistakes that you might make. You then need to understand how to review a stock against your existing portfolio. So is it actually better than what you've got? Otherwise, why are you buying it? And then the same against your objectives. And if there's ever any doubt, sleep on it. So never ever rush that buy decision. There's always another day. You only have to hit stuff in your strike zone. You can be as patient. You've got potentially 10, 20, 30, 40, 50, 60 years, depending on your age. Patience is very important. There's also a mentality element to that as well. These aren't just processes and calculators. You just need to understand your emotions and how you can control them or be aware of them in your buy decisions. So those first 6 core conditions for success you need, I think, in order to be active in the market. But these next final 3 will help you kind of improve how you go about doing it. The first of these is the selling piece. So actually, can you identify when fundamentals in your portfolio change? Have the ability to review the story? Can you find alternatives. So when do you sell? When do you lock in profit? Do you sell at a loss? There's the weeds and flowers analogy from Peter Lynch. So it's just getting that kind of mindset of when or how to sell. And then there's a track element. So you need to regularly, I'm not talking weekly or even monthly, but on a periodic basis, review your portfolio and how it's performing against the objectives. And that might be something you do every 6 or 12 months, because the portfolio should be a long-term thing, solution, and you don't need to review it regularly against the objectives, because it's a long-term game here. But what you should do perhaps more regularly is track your total returns and compound annual growth rate. Again, compare that to the objectives. You need to have instruments or tools for that. You also need to track news related to your stocks. So if you hold 100 stocks, for example, it's going to be quite difficult to keep up with the news. So if you hold 10, that might be a bit easier. And also have something set up for price alerts. So things that are on your wish list you need to have. Can you actually get alerted? So when they drop to your target price, you can act quickly and buy at that price. And the final condition for success is perhaps what we might call useful information. So do you have in your armory to help you improve the specialist websites to use, whether that's Yahoo Finance, Simply Wall Street, etc. So you can get the right information, the right tracking, etc. There's the educational piece. So have you got a view of books on the investing topic to read? I'd certainly recommend Peter Lynch's One Up on Wall Street, but also The Intelligent Investor, if it's quite a bit of a harder read, but it's well worthwhile. There's plenty of information on YouTube. You just got to be careful around filtering what you hear. Don't take it as gospel. Make sure you can understand it and apply it for a situation. And then there's the information around super investors. So have you got a way of finding out what Warren Buffett's up to, what Phil Town's up to, etc. So those are the conditions for success. The 9 key ones here, just to reaffirm that list. There's the understanding the investing style and options. You need to get yourself the right broker, find a method to screen for the right stocks and funds, and then a method to qualify and value them, and then get that buy decision right, and then to improve your profitability or success, your returns, get that selling piece right, make sure you're able to track, and then upskill and find that useful information. So I hope you found that useful. The conditions for success to investing. And my belief is that if you can nail all of those conditions, you should be in a good place to start investing. But if there's any doubts or any uncertainties, do always take advice from professionals. And furthermore, on this channel, we do have a lot of information dips into those different conditions. Do stick around, and if you've liked the presentation, do hit that like button. That'd be greatly appreciated. So I hope you found that interesting. I'd love to hear your feedback below. Think about these. What is the most important condition for you? Drop me a comment below to let me know what you think the key condition is. And on that note, thanks for joining me, and I will see you on the next one.